IULs.
IUL.
Okay, and is that a good one or a bad one?
It's a bad one.
It's a
Horrible.
bad one. Okay. Now, how do we know it's really bad?
Because the RP legal is made a whole business out of
Yeah, like
getting rid of it.
they've been selling more of it. Why? More and more and more of it. Why?
Because it makes good commissions.
Because of TikTok, because most Americans are now getting their financial education from TikTok, true or false?
True.
And they're being sold stuff, told stuff, and sold ideas that are dishonest, deceptive, lies, and that what they're not told is what they really need to be told. And who's telling people what they really need to be told?
This law firm, us.
Okay. And now what's happening in the industry, it's so fascinating. Okay. And I don't want to play this whole video. Okay. But what's fascinating is, would you like to see play the first part of this? This guy is saying IUL is no good. Tell me what you think about this.
Did you know every company has the ability to just change those indexes on an annual basis? When you buy a whole life policy, when you sign on the dotted line, you are becoming a partner of the company, essentially a shareholder of a participating mutual company. Most of the IUL agents out there on TikTok and Instagram that have gotten really popular, gained hundreds of thousands, if not millions of followers, is because they're selling hype, they're selling sizzle, and there's no stake behind the sizzle. And the reality is they've only been doing this since 2019, maybe even less. What's going on, cash flow hackers? It's Chris with Life 180, and today we are talking about the 6 lies index universal life agents use to sell IUL. Now, out of the gate, I got to tell you, this video is inspired by one of my most popular videos. That is the 4 lies index universal life agents use to sell IUL. And ultimately, this is just an update because, let's face it, as time has gone on, IUL has evolved, and IUL agents would have you think that it's evolved in a positive way for your benefit. But I'm going to tell you that the only thing that's evolved is the bullcrap they use to sell the stuff. And so the purpose of this video is to show you the difference in the way that it's being sold today. And if you haven't watched my other videos, you could see the 4 lies used to sell IUL is probably one of the more popular videos that I have going right now. I also have the 4 lies used to sell IUL in 2023. And here we go for 2024. We are up to 6 lies in 2024 because, you know, they just got to get more and more sneaky to get you to buy their garbage. And so here we go. You can see I have a list behind me. What I'm really looking to do in this video is to educate you deep depth on how this stuff works. Because let's face it, if you are an agent and you're looking to sell this stuff, you better know what you're doing. Because if you don't, and you put your friends and family into this, your business colleagues into this product, you are going to damage a lot of relationships from a long-term perspective. And it might not be something they can come back from. If you are somebody who's looking to buy this for yourself, I just believe you have the responsibility to do your due diligence and really understand what you're putting your money into, because this could potentially be one of the bigger financial decisions that you ever make. So you cannot get it wrong, right? And so the purpose of this video is to kind of build off the last 2 videos. If you haven't watched those, go back. I'll link them in the description below. I'll put them in the comment section as well. You can go check it out. They'll all be there. I really, really suggest everybody check that out, but don't go anywhere. Make sure you watch this to the end. If you find this valuable, make sure you like it, share it, get it out there to people. If you haven't already, make sure you subscribe and hit the bell. That way you're notified every time I launch a new video. So let's do this. Lie number 1. Let's talk about this. This is going to be a lot of fun.
Okay, now, Gordon, what do you think about that? What did you gain from that?
He didn't even get into the lies, but what did I get out of it? I mean,
the main thing he got out of it. The main thing he said from that part.
They're getting better at lying.
I'm asking Gordon.
Oh, sorry.
Okay, it's okay.
I think Allison was right on it. They're getting better at lying. They're lying.
That's not it.
Okay.
That's not it. Ace, what'd you get out of that? It's mind-boggling to me.
Well,
it's like blowing my mind blowing. Huh?
I mean, the first part that I heard was that a lot of these agents don't even know what they're selling. I mean, they haven't been in the industry since 2019. Most of the new agents selling this product, so they really don't understand what they really are selling. And you're breaking, and you're going to mess up relationships if you're going to sell this thing to the people that you know.
Okay, that is true, but that's not the best news. What was the best news about the video?
Oh, it's the fastest growing, I think he said, type of insurance.
Yeah, that's good for us. But what's the best?
Education.
What's the best
Educational.
news? What's the very best news? It's one of the first things he said. I should have stopped it right there.
He said that
It's
the
up to the 6 slides.
And I would like to notice and just bring to our attention, we have just got the 46th person on here. When I came back after my surgery, we had like 26. When I came back after my liver surgery, resection, taking the tumor out of my metastasized tumor out of my liver, the first Monday I was here, we had 26. Now we have
46.
46. Can we go like this? Okay. Okay. Now,
Christian,
what I'm going to do, yes, Ellis.
I just wanted to say, because this is a quote holiday and they got furlough, we got extra people, but
Okay, good. Well, maybe that's the reason.
Did you know every company has the ability to just change those indexes on an annual basis? When you buy a whole life policy, when you sign on the dotted line, you are becoming a partner of the company, essentially a shareholder of a participating mutual company. Most of the IUL.
They can change
Now,
the
I gave it
indexes.
away. So what is the thing to get really excited about?
You becoming a shareholder.
Yeah, shareholder, yeah.
To change the index.
The lie.
Anybody?
Whole life agents are now against IUL agents.
Who said that?
Me.
Who said that?
Miguel Lazo.
Miguel.
Okay, I got two screens now. You're not even on the screen, Miguel. Oh, there you are. Okay, gotcha.
Yeah.
Miguel, yeah. Now we have, not only are we killing IUL, whole life agents are killing IUL.
Mm.
Now we're going back to what Gordon, you had, and Deepak had when you got in the business. People are killing IUL and saying the way to go is
whole life.
whole life.
No way. That's what I got
Yes.
pitching.
Yes.
Golly.
Yes. The whole thing, that is a whole life agent
Really?
killing IUL for an hour. And then the IUL guys have a video killing the whole life policy for an hour.
I love it.
So that's a good thing for us. For
Good
sure.
thing.
They're doing half the work for us.
That's the greatest thing. I mean, that I can't tell you how excited I am
Mm-hmm.
about, man, we got a lot of people excited about selling whole life. We got a lot of people excited about selling whole life. And both of them
Fighting with each
are
other.
trash. Why is whole life trash, Gordon?
Well, it's one of the most expensive ones. And it just goes against the fact that nobody in their right mind needs the exact same amount of insurance for their entire life. That's that's a crazy idea.
Okay, and why else? What's
Money making rules.
Yeah.
why else?
They saving money for someone else. Never
They
gonna do
sell
that.
it as a savings plan, and at death,
They don't get it.
you lose your savings.
Yeah.
Mm-hmm.
Let me ask you a question. Would you ever save money in a bank that when you died, the bank kept your money?
Hell
No.
no.
Well, that's how every whole life policy works. How is
Everyone
that
else.
better?
Yeah.
What rate of return do you earn on the bank? I mean, in the policy.
It's like 2 to 4%.
4%.
1 to 4%,
1 to 4%.
1.2% average. If you hold it forever, you may get up to
3%.
3%.
Maybe. And if you take a loan, then it drops your interest further down.
So we got the industry. Then we have the law firm. Index Universal Life.
Sucks.
And then we have IUL is a
Ripoff.
and we have insurance raking in the profits. And then when you think about retirement, the definition of a business is what?
Find a need and fill it.
There are 6 harsh truths about America's retirement. What? Crisis. Okay. What are the 6 harsh truths? What are they? Number 1, insufficient savings. How are your savings looking? With at the bottom, the shortfall is often due to a combination of factors. What are the factors? Stagnant wages, rising living costs, and lack of financial literacy. How are you satisfied with how your income is growing compared to where your income was 5 years ago? Are you keeping up? Rising health care. As you get older, what happens to your health?
It deteriorates.
That's a second looming burden on who?
On people.
On you.
Yep.
On you. And
our clients.
Your neighbor.
Yep.
And your family.
Mm-hmm.
And your community and the country. Number 3, Social Security. It will be out of money in
2033.
How old will you be in 2034? Number 4, longevity risk. Outliving your savings. The number 1 fear people have is in retirement is
outliving their savings.
Outliving their savings. Guess what most people, if things don't change for them, guess what they're going to do?
Outlive their savings.
How's that look? How's that look?
Not good.
Okay. What about this? Many people, says here, do not fully understand the complexities of retirement planning, investment strategies, tax implications, and withdrawal rates. Do you think that's true or false?
Mm-hmm.
This is a hidden challenge. Number 6. Well, I'll just keep working.
If you can.
I'll just keep on working a job. Well, it finds here that older workers are struggling to find employment, and those who do find employment get paid
lower
a little bit. Now, why is that?
Because they want people that are young and energetic.
Younger employers.
Why?
They're cheaper, younger employers.
There you go. And they're cheaper and they
are younger.
They're more
energetic.
They got more
productive.
They're more productive. They're more
coachable.
Yeah, they're more moldable.
That's right. Yeah, that's right.
Yeah, they're more gullible.
Yeah.
All right.
Stupid.
Yeah. Okay.
That's true.
So anyway, I mean, if there was ever a time, Mark, does that make sense to you? Good to see you.
Yeah, good to see you guys. Yeah, 1,000%.
I mean, am I making this stuff up?
Nope.
What's the
one back? That's one back from,
Okay, so what's the answer for people?
They need to make more money.
Okay, and how do you make more money? Like, if you had to make more money, what would you do? Who would you call?
Me?
Yeah, anybody. Yeah, Mark.
Oh, anybody. Yeah, I mean,
I know what you're doing. You went to Mississippi to do restaurant consulting.
Yes.
Okay, for 2 weeks, right?
Yes, sir.
How was that?
It was great. I made $500 a day for 14 days.
Nice. Did you enjoy being away from your wife in Mississippi?
Not at all.
You didn't like that?
Nope. And my 12-year-old Rottweiler.
And your dog, do you want to move to Mississippi?
Absolutely not.
Do they want you to hire you full time?
Absolutely not.
They don't?
Well, they'd love to, but they can't afford me.
So that's not a long-term solution. That's just
Nope.
a
This
2-week
was
gig.
just a filler to fill the bank up a little bit. Not the bank, but you follow me. But
Yeah, I
that's
follow
why I'm
you.
here.
Yeah.
This is you look around and I'm back here because I didn't want to leave, but with injuries and trying to get through all that, well, I believe this is the best path for me.
We're at 47, by the way. Okay. Anybody have any success story, question, anything you'd like to input or share right now?
One thing that we had on
success story, Pierre.
Matthew was first.
Well, I was going to ask you to finish the question that we had on Saturday about to give a good answer to give the recording for how are we able to buy term and invest the difference and still stay in business, whereas other companies can't do it.
It's a simple answer.
Okay.
Why are we able to sell, buy term, and invest the difference, Matt?
Yeah, how come we can do it but nobody else can?
Because of number one, when Art and the original people were setting up the company, what were they aware of?
I'm not sure.
This may not work.
There's a lot of opportunity, maybe.
Yeah, we may not make it. That's true.
No. What were they aware of?
Everybody had the wrong stuff.
Yes.
They were aware of why the insurance companies couldn't make profit doing it the way they were set up.
Not only did they understand that buy term and invest the difference was the right concept, but they also came from that industry, so they knew the problems that the industry had in selling term insurance and mutual funds. So they designed a company in a completely different and unique way to be able to distribute low cost and low profit products to the masses because of the entrepreneurial,
distribution model.
The distribution model. Exactly right.
They don't have any costs. They don't have. You look at New York Life and you can drive down a highway in some cities and find big, massive signs. New York Life, Northwestern Mutual, State Farm. You'll never hardly ever find a big Primerica sign in a big city somewhere.
I never seen one. And if I have seen one, guess who paid for it?
The person that was built that distribution office.
The RVP who had that lease or space.
Yeah,
100%.
I saw one in LA, and it was Doug Hartman's office. He had a big Primerica. You could see it from the highway.
Yeah. Okay, but
Arizona,
Primerica our insurance company didn't pay for that. Our investment company didn't pay for that. The franchise owner paid for that.
Ben Shepherd's got a sign on his road because he owns that office building. He made so much money, bought an office building. So it's his. He owns real estate.
Our company didn't buy that building for Ben.
Oh, no. The company didn't buy nothing for Ben.
Ben made money and bought his own building.
It was an investment. Yes.
Right.
It's an asset.
Yeah.
The other reason is why. So that's one reason, Matthew. You got that? Now, what's the other reason? In terms of how Primerica Life used to be before Primerica Life, the manufacturer of the term insurance product we distribute, who was Primerica Life?
Milico.
Metropolitan?
No.
I don't know.
Metropolitan. Metropolitan is still a company.
I don't know then.
Hector, what was
Milico.
Milico.
And what did Milico stand for?
I don't remember what it stands for.
Massachusetts Indemnity Life Insurance
Right.
Company.
It was
Indemnity life insurance.
Massachusetts Indemnity and Life Insurance Company, Milico for short. Now, they were a company up in Massachusetts that our company bought to manufacture the term insurance product.
Okay.
Okay. Now, when a company, and all they sell is term insurance, they don't sell whole life, universal life, index universal life. Our insurance company that we represent only sells
term insurance.
Term insurance. Okay. Now, how does Mass Mutual, New York Life, Prudential, Metropolitan, etc., make money?
With reinsurance, right?
I said Pacific Life. I said Metropolitan. I said
IUL.
Yeah,
Whole life, IUL, cash value.
cash
how
value
do the whole
products.
cash value companies make their money?
By selling, by taking the money and then investing
Excess premium.
Yeah, using the premium to make money with the people's premium.
By using other people's money.
Exactly.
When Gordon bought his whole life policy,
Yep.
term insurance was a part of the insurance. Gordon was paying what, $80, $100 a month, Gordon?
Yeah, $83 for 100,000.
Okay, so the 100,000 probably cost
$8.
Cost him $10. So the $70 are going to the cash value or expenses. Okay.
Yes,
So they're taking the $10 paying for term insurance, and then they take the $70 and invest it mostly in
bonds,
real estate.
Okay. And they're earning a rate of return
that's higher
on
than
the bonds and crediting Gordon's policy higher or lower than what they're earning.
Lower.
Much lower.
Much lower.
So cash value life insurance companies make their profits by
investing the premiums into bonds.
Using
people's
money. Using people's money.
Yep.
Right.
Now, how much money did Milico make using people's money?
None.
None. How much money does Primerica Life make using people's money?
None.
None. What do we say to do?
Buy term and invest the difference.
Invest it.
You pay the $10 and take your $70, Gordon, and put it where?
In your own investment.
Yeah.
Mutual fund.
Into a great investment in an IRA. So you have tax advantages. You have a better investment that gives you a higher rate of return that allows you to
build wealth, become financially independent,
have your money double faster,
7
which
years.
allows you to build much more wealth in the same period of time. And since it's in an IRA 401k, you have great tax deferral, tax advantages to allow your money to compound even more, right?
Yep.
So our company is not making money by using people's money. We make money the old-fashioned way. We earn it how?
Commission.
How does Primerica Life make its money?
I'm not sure.
Well, you need to be sure.
That's why,
All right. Well, let me ask you this. How does a car dealership make money?
Selling
I sell cars.
How?
Marketing.
How do you make money in the restaurant business, Mark? How is money made at the end of the day in the restaurant business, Mr. $500 a day consultant? You might know this.
By selling my product and, of course, getting a margin where I make money off of it.
And what does a margin mean?
Margin means I make it more expensive.
Okay, so you buy a tomato, a bushel for $2, and you sell it on the hamburger for
$7.
Okay, there you go.
Right.
What about the hamburger meat?
Buy that for $5, sell it for $15.
You're in the cookie business, aren't you?
Oh, yes, I am.
How much does it cost to make the cookies, and how much do you sell it for?
Pennies on the dollar. I give you about 8 cookies for $13.
And how much does it cost you to make 8 cookies?
All in about $1.
Okay, so if you go to Best Buy and buy a computer for $1,000, how much does Best Buy pay for the computer?
$200, $100.
Yeah.
I don't know. Okay, but
I
it's
don't know,
less
but
than less than the price, right?
yes, it is.
Okay. What about when you go anybody buy a car?
Yes.
Okay. When you buy the car, how much did the dealership pay for the car?
Less than I'm paying.
Okay. What if you bought some carpet and you put carpet in your house? How much did you pay for the carpet?
More than they paid.
Okay, more than right. How much did they pay? How much you pay? You paid more than the carpet company, right?
Yeah.
So every business who sells a product buys the product at a
lower
price and then
marks it up.
Cost.
They mark it up.
And you say those SOBs.
That's business.
But they're not SOBs because if they didn't do that,
their families would starve.
There's no business.
There would not that business would not be in your community. They're not in business to buy a car for $50,000 and sell it to you for $50,000. You got it?
They don't have a Red Cross written on their front door.
That's right.
We want companies to make profits. We just don't want them to rip us off.
There you go, Gordon. That's right. It's okay to make a fair profit. It's not okay to rip people off.
That is correct.
It's not okay to deceive people. It's not okay to say something about a product that's not true. So our insurance company has relationships with reinsurance companies, and they're always trying to be able to be the most competitive in the term insurance space. And they're not overcharging people and investing the money and making it that way. They're forced to buy term insurance from reinsurance companies, annual renewable term, okay, to make money in the insurance business by buying at wholesale and selling at retail.
Okay.
Gordon has a question.
Go ahead, Gordon.
No, we got, you said success stories, and then we got Matt brought up what's out of the question. Yeah.
Okay, Matt, does that make sense?
Yes, sir.
Okay. All companies, what?
Make money off of a margin.
Correct. And we are
a company.
And we are
a company that makes money off
no
of a
different.
margin. Yeah, that's fair.
No different.
Yep.
There is a cost for a company to be in business. Otherwise, that business is not a
business.
Okay. And not one other. How many insurance companies are in the business right now?
500.
Not one other insurance company has figured out how to do what we have done.
Yeah. Right.
Why?
Because they've been doing it wrong for so long.
Why?
They can't fix it.
Why, Tanisha?
Because they can't.
I don't know if can't is the
It
word.
would go against everything that they've said, everything
They
that
don't
they've
want to.
told.
Maybe you're not gouging the
because
you can't understand we're not gouging.
Because
you have to go back and say that you've been lying the whole time.
It's because it's very hard.
Yeah.
It's hard to do.
Just hard.
What our company has accomplished is not easy.
Right.
It's hard.
Yeah.
It's hard to sell a low cost product, a low profit product, and have a successful business model. Do you understand that?
Yes.
It's hard to succeed doing what's right.
Right.
In the financial industry. That's why
the other companies screw people over because
that's why nobody else is doing it.
Yeah.
If it was easy to do, guess what?
Everybody would
be doing it. But because it's so hard, and that was Art Williams' greatest fear in the beginning, he said, oh my gosh. And I was there. The company was founded in 1977.
Mm-hmm.
I got licensed in
81,
85. So it was somewhat of a
new company.
Baby. Mm-hmm. Okay. So Art Williams at that time was afraid of what?
Running out of business.
Out of business.
He was afraid they were going to make he thought whole life was so bad they were going to make it illegal.
The odds are like this.
He thought, Jay, they were going to make whole life insurance illegal.
Yeah.
And then everybody was going to be selling term insurance, and then we wouldn't have that competitive advantage of doing what's right, because then everybody's doing what's right.
Yeah.
But here we are today in October 14th, 2025, 47 years in to the company's life. And now the IUL is number one, and the whole life guys are trashing IUL. The IUL guys are trashing whole life. And we are still the only company in the whole industry doing 100% term insurance and mutual funds. Now, if that doesn't get you excited about being, number one, doing what's right, and number two, being the only voice in the industry, I don't know what I could tell you.
Yeah.
Unbelievable.
It's unbelievable.
Unbelievable.
If there was ever a time to go bat crud crazy, if there was ever a time to go lunatic, massive activity, I mean, balls to the walls, talk to more people than you ever, if there was ever a time to go for it in your life, guess what?
This is it, baby.
Yeah, what do you need? What do you need? What more information do you need to have a clue to say that, oh my gosh, this is a special time?
Mm-hmm.
Your own bank account should probably motivate you enough. True or false? Is that too? Is that? I like.
Say one more time. What did he say?
I like Kristen Rhodes' a reaction there. Okay, I like that. I'm just. Well, it's true for a lot of people, right? They're looking for the perfect solution when they just need a solution.
There ain't no perfect solution.
Yeah, and by the way, that's right. Okay,
no
Gordon,
perfect.
success stories.
Yeah, just two quick ones real quick. This last week's been challenging. We had to fly up to Wisconsin Wednesday. Wednesday, I helped a client referral. The father, or excuse me, the husband didn't have any coverage. He has just a tax ID, no social, but they wanted to get life insurance on him. So we put a $50,000 policy on a 50-year-old man. It was about $50. And I was in the airport doing that.
Wow,
no
nice
excuses,
job.
doing it from the airport. Friday,
Is there any strategy you would like to share, Gordon, on how you did it, what you said, any objections you heard or they had that you had to overcome?
It was very simple. It was like a lay down like Ace, and then had one. And then Friday, because this is a client with the daughter's the client, the wife's the client, this gentleman just didn't have coverage.
We're up to 48. We're up to 48, folks. Can you
Friday,
believe it?
Friday, I helped Frida. I don't think she's here with us today, but Friday I helped Frida put a $1 million policy on an occupational therapist up in upstate New York. And she didn't. I went over. I shared some info with you about a crappy term where it converted from $1 million to 50,000, and so we took an application for $1 million on her, 25,000 on her 3 children.
So just because they have term, we still should get the policy and analyze it.
100%. There's not, it was $30 less with their term. So ours was $30 more, but I'm putting a better product in her hands and just so many levels. And then the kids now have coverage, which she did not have. So she's got
now I want to talk about that, but keep going.
So she got a better plan. And then
I want to talk about that right there.
Yeah.
Gordon.
So just no excuses. Moved half a household, and it's just been nonstop. So, and I got appointments all day today.
Okay.
And we're at 90, and we're at 10,000 as a team. I don't know where.
Awesome job, Gordon.
I
have a question. Wait, I got a question for you, Mark. Okay, so Gordon just said this person had a term insurance policy, and ours was $30 more a month for the same amount of term insurance.
Right.
Now, based on what you've learned already, I got more to say on this subject, but why do you think that is?
But there has to be something in the first term insurance that doesn't play out well. So
okay. Let me just, to save time, Mark, let me just share with you.
Go for it.
Okay. If your competitor is selling cookies, both of you pay $1 for the material.
Yep.
If the business selling cookies is selling them at $25 a cookie and you're selling them at 15 every time, now the consumers that are buying them for 25 don't know 15 is available.
Right.
But all of a sudden they find out about the same cookie being $15.
Right. Could
the cookie seller selling them at 25 every time to people who don't know they can get them at 15, could that cookie, you're selling them at 15 because you've got to sell them at 15 because if you sold them for any less, you'd be out of business. You couldn't pay your agents. You couldn't pay for your office. You couldn't pay your team. You couldn't pay your actuaries. You couldn't pay the service. You couldn't pay for the technology. You couldn't pay for everything to be in business. You have to sell them at 10, 15, at $15 to make them worth your while, or you're going to do something else.
Right.
So everybody you're treating fairly. It's not what, right?
Right.
Then there's somebody treating people at 25, treating them unfairly. And then those people find out about your cookie at 15. And then the guy selling them at 25 says, hey, Mark's at 15. Oh, you wanted the $10 cookie?
Okay.
We got the $10 cookie and it's the same cookie. Now, the only people that get the $10 cookie are who?
Or the people that are educated
about the $15 cookie.
About the $15 cookie.
Exactly. $15 cookie.
Right.
Okay. So how many of you would keep if you were getting ripped off for 20 years with the $25 cookie company, and then you found Mark, Mr. Honest Guy, not ripping off anybody, just trying to do what's right, being in business, and giving everybody the $15 cookie for the same cookie, whose business are you going to support?
The $15 fella.
Why?
Because he's given a fair deal, and I feel ripped off by the $25 cookie.
And when was the $25 cookie salesman going to tell you about his $10 cookie?
Never, until he found it. Never, ever.
Now that's called
business.
No, that's called, from our point of view,
whole life.
Doing what's right.
Yeah.
Doing what's right 100% of the time. And when you do what's right 100% of the time, you cannot do what our competition does, which is rip as many people off as possible. And the ones that are fortunate enough to learn what the truth, you give them a better deal only because they somehow found out the truth. But everybody else you're trying to rip off.
Yep.
Have I said that? Gordon, do I need to add anything? Ace, do I need to add anything about that?
That's true.
Because you need to make a decision on who you're going to represent. What do you want to represent? What do you stand for as a human being?
Right. The crusade is the most important thing because we're doing what's right.
That's right. And cheapest, do you live? Hey, Kristen, do you live in? You laughed a while ago. That's why I'm going to use you. Do you live in the cheapest house?
No.
Do you eat the cheapest food you can possibly find?
No.
Do you drive the cheapest car?
No.
Do you shop at Goodwill and wear the cheapest clothes possible?
No.
Do you... Why don't you use the cheapest?
Because it doesn't always come with good quality.
How often is the cheapest the best quality?
Almost.
When you're broke.
When is the cheapest house the best?
When it's wholesale.
When is the cheapest house the best?
Never.
When is the cheapest food the best?
Never.
When is the cheapest car the best?
Never.
Okay. When is the cheapest financial product the best?
Never.
Never.
Never. So Gordon said, well, their policy was $30 more, but it did not compare to what, Gordon?
To options that she could have with us.
And what were those options? Let's list them out, folks. And you should be taking notes. What do we do? A FNA, a fin number?
She gets a plan and an advisor with us.
Gordon, what is the value? Is a plan worth $30 a month?
I think so. Yeah.
It's worth more than that.
What would a plan do? What would a person with a term insurance policy $30 a month less with no plan, and then go 30 years versus one that has a term that's a little bit more, but now they have a plan and an advisor? Who's going to end up better?
Probably the one with a plan and advisor should be.
Statistically, who's going to come out better?
Oh, the one with a plan, 100%. Yeah.
Investment performance historically is what? Investment performance.
10%.
10, 11. What is investor performance?
4%.
4%. Why?
Because of it's their performance. It's basically their behavior.
It's the person's behavior that dictates performance, not financial products. It's the plan, it's the advice, it's the guidance, it's staying the course. It's knowing what to do creates the
outcome.
Value. Now, how much do we charge for the plan and the education? Zero. Next question is what?
Who's your advisor?
No.
What's your plan?
If the F&A and the plan and the commitment to it costs how much?
Zero.
The next question is, next logical question is,
can you afford zero?
No. The question is, what is the education and the plan worth? That's the next logical question. If it doesn't cost you anything, you have cost and you have benefit. Cost, benefit. Chanda?
Analysis.
Cost benefit analysis. So Gordon, the cost of maybe saying business was $30 a month, but what is the benefit of the education and the plan that you're going to give them?
It's hard to measure, but it should.
What is the value?
Hundreds of thousands of dollars.
Maybe
millions.
Maybe million. Now, for somebody that has $1 million versus 100,000 at retirement, what is the value of that?
Yeah. And she had
humongous, gigantic.
She had no retirement.
And that's why some of you think if somebody has a cheaper term insurance policy, it's over. It's not over. That ain't what we're doing, trying to give people the cheapest. We are trying to do what?
Implement a plan.
Right.
For them to get financially independent.
Most people don't get that in our business.
Insurance is not the be all end all. It's the beginning. It's the foundation.
Most people aren't following their own financial needs analysis. That's why they don't get it.
I think I got a question.
Yes.
As a new person here. So the biggest difference between their term and the one that we had is because they're paying more with ours.
Not always.
So based on what you just
Sometimes and never at renewal.
But she was paying more with ours.
Yes, sir.
But with theirs, is it like it wasn't a reputable company?
It's not about the reputable company. It's still an A+ rated carrier, AIG.
There was no plan.
It is the plan what she had.
It seems like with ours, where it's a more reputable company and you're getting the advice and the guidance, that's what it is here. And you added the children's rider, I guess. That was the biggest reason why she did the switch.
Wasn't the only reason why. The other reason why was because
she was getting the same exact coverage.
Yes.
For less.
Yes.
But you just added the children's rider, right? That's what the biggest difference was.
Asante, let me ask you a question. If you had a 30-year term that you had purchased for $1 million, but on the 31st year, your $1 million immediately went to 50,000.
That's what I was asking.
No questions asked. You have no choice in the matter, Asante.
Wow.
It goes from $1 million to 50,000. And not only that, your cost goes up significantly.
Yep.
So your premium increases, but your protection drops to 1/20th of what it was. What do you think about that?
That's crazy.
He didn't understand the question,
I
Gordon.
didn't understand that.
Okay.
So if you have a million in protection,
Gordon, you're missing. He's missing a part of it.
Yeah.
And what part is he missing?
The plan.
No, I just talked about the plan and the education and all that. Let's get back to just straight term insurance. Term insurance comparison. What does Asante not know?
Benefits that I'll provide.
End of term options.
Right. He doesn't know what ours does at the end of the 30th year.
Yeah,
Right.
yeah.
Well, that's why I was asking him.
Yeah.
Would he be okay with a policy that went from $1 million in coverage to 50,000? That's not a complicated question.
I know, but ours does what?
Gives you options.
Does not do that. It gives you the option to keep the million.
He could keep $1 million.
So if you have cancer, if you have high blood pressure, if you have diabetes 30 years from now, and you're forced to go from $1 million to 50,000, and you want to leave $1 million in protection and for your family, you have no choice. You cannot. With ours, you can keep the $1 million.
So would you rather, Asante, have the opportunity to have the $1 million, keep it, or have to go to 50,000?
Keep the $1 million.
I think Gordon.
Why would you rather keep? You guys got to learn how to ask questions. Why would you rather keep the $1 million than be forced to go to 50,000 for your family?
Because you don't want to lose.
Why? Why don't you? I'm asking you. Why don't you want to lose?
Because 50. It just makes more sense to keep what you got.
So you're saying it makes a difference to keep $1 million versus 50,000?
Correct.
Are you sure?
Yeah.
In what instance would you rather have 50,000 than $1 million when you die for your family?
Never.
No, you wouldn't.
You wouldn't.
Did I switch the? Yeah.
So for that privilege, isn't that worth an extra 30?
Yeah.
Plus the FNA, plus the education, plus the children, plus terminal illness, plus all the other things helping you in all areas, getting you plus.
There's a lot of pluses. There's a lot of benefits. It's a lot of benefits. So
it's
something
planning
to learn the
options.
benefits.
Everybody wants more options. If you could have more options, you have very little options with what you purchased. The options are poor.
Well, let me ask you this, Gordon.
You have no option on that, Gordon.
Did they have an FNA?
No FNA, no investment.
Did they get a financial education?
Yes.
Not
from the other company. No, nothing.
They got nothing?
Nothing.
Well, then it goes back to what question?
Would you rather something or nothing?
No, Matt. What's the financial education worth?
Yeah.
How much? Give me a number.
Hundreds of thousands of dollars over time, millions of dollars, really.
Well, which is it, Matt? Millions or hundreds of thousands?
Well, it depends on what you do with it.
What's a financial education worth, Matthew?
Millions of dollars.
Okay. So would you rather, so you're telling me you were with a company that didn't give you a financial education, and that's worth millions of dollars, and we're giving you a financial education worth millions, and you're going to consider sticking with them?
Well, I don't think I should.
Did they give you a written financial game plan like an FNA that helps you calculate your net worth, your financial independence number, manage your expenses better, show you a plan to get out of debt, show you how to never run out of money before you die, and then educate your children, give you a chance to help you legally and with identity theft, which, by the way, is a huge problem today, identity theft that we never talk about. That we have a great plan for it. That's a huge problem. Every day somebody is trying to get into your phone and computer, and you're being listened to all the time.
$1 million too at death. You buy it because you want to protect your family. So with the current company, $1 million check shows up, nothing else happens. So the family has to figure out what to do with the $1 million. And most of the time people don't make good choices. In the event she dies now and $1 million shows up, I know she's got 3 kids. I know how to set up UTMAs. I know how to make sure that that money creates an income that could last forever for that family with proper investments. If $1 million shows up in most households with their current financial education, they blow it.
True.
No education with money is bad.
If the $1 million shows up with a company that's primarily selling cash value IUL insurance, when that death benefit comes and they say to the 3 kids, hey, here's, $1/3 for each of you, what you should do is front load your IUL with 300 whatever thousand. They just figured out a way to screw your family later, right? Because you don't have the ability to actually show them how to do the right thing with the money.
They don't have a coach with them for the rest of
Very
it.
true.
Soon as they deposit the money in the bank, so many people call the client to try to take the money.
One thing happens too, guys. If you're on more appointments, a lot of the cloud that you have right now goes away because you should be working with somebody and doing planning. And planning requires you seeing other accounts being set up, investments set up. You got to get involved because if you never see that, it's like this is a mystery. It's not a mystery when people have good coaching, they have money, they've been through these situations. It's experience.
The best way to learn is in the field.
Get a lot of appointments.
Period.
We're working on a nasty policy right now. This lady, she's highly underinsured. Her husband passed away. She has like $250,000 that was left to her, and some nationwide guy comes out and is trying to get her to dump all of her money into an index universal life. So we'll be breaking this down today. So I will have something amazing to share with y'all soon. So
Jay, that lady is on the verge of getting ripped off so badly. It's incredible. And you are the only thing getting in the way of that.
Right.
And that's something to be very proud of.
That's awesome.
Success. I had a success story as well. I didn't get a chance to share last week. There was a lady that I actually met last week. Well, a week ago before that, but I had help on Wednesday. I had actually met her on a bus. I'm in between cars, whatever like that. So I met her on a bus. I had a conversation with her, and she had informed me that she was caring for a child's father of hers that had a brain contusion or something like that, and she's caring for him. And she ultimately we had got to talking because I allowed myself, made sure that I was presentable and things of that nature as I was out and about, just in case I was going to be out and about prospecting. And she got to asking me what I had going on. And I told her, I'm in the financial service business. So she she shared with me that she was looking for coverage for her child's father, and I told her, no, I'm not sure we will be able to help, but I went to ask her, if she had coverage herself, and she said she did. She said she actually had two policies. So I went ahead and I made arrangements. I went and got a phone number, and we got connected, talked. I found out that she has a friend that that she was supposed to be good friends with that actually talked her into getting the IUL. And she had a term policy. She had a term policy for like 6-7 years. And in addition to that, just past couple years, just 2 years ago, she had a friend that talked her into getting the IUL policy. So basically, I'm gonna go ahead and make this short. Just the term policy alone, because the IUL policy was like 56,000 for $180, but the term policy was a 750,000 for $100 for her, $83 for a child rider. So just alone, just me going ahead and doing a $750,000 policy for her, and with a child rider, of course, a $10,000 child rider, we went from 370 with pretty much all the policies she had down to $122 for the $750,000 and a $10,000 child rider. And that just came from me opening my mouth and have a conversation with her on the bus.
Wow.
Let's go, Pete.
So
let's go.
I went ahead and I sat with her. I sat down. We did the
Great job, Pierre.
Straight line. I did a financial. I did an FNA for her. I provided her a financial independence number as well. So she got the service of getting a financial independence number provided for her and being assured that I will stick with her as as along with my other partners as far as a reputable financial advisor for her moving forward. You know what I'm saying? She got all that from a conversation on
That is so
on the bus
awesome.
by me opening my mouth. So
That
thank
is
y'all
so
very much for
awesome.
allowing me to open the
Nice.
conversation.
Let's
Man,
go, P.
that is
All
so
right.
fabulous. That is
Great
so
job, man.
fabulous. That is just
Open your mouth,
wonderful.
baby.
She had 56,000
Wow.
plus
Yeah, $56,000 IUL policy. That was something additional.
and you gave her one 750.
Now I gave her a $750,000 policy for $122.
That's what I'm saying. You gave her 750,000.
Yes,
and saved her how much a month?
I saved her like $250,
And she had
$240.
56,000 of life insurance on her.
She had a term policy also, though.
What was the term policy?
The term policy was 750,000. The
So 150
IUL
plus 50. So she had 200,000 and you gave her 750,000?
Well, I gave her. She already had a $750,000 term policy. I just gave her
okay.
our $750,000 term policy for less. For less.
Gotcha.
She's 30.
So you gave her the
39,
same amount of insurance and saved her $200 a month.
Yeah, I saved. Yes, same amount of insurance. Yes, absolutely. Yep.
Hey, I suggest next time write that crap out and share it on your Okio cam.
Yes,
so I can follow you better.
Once I get one, yes, absolutely.
All right, there
Once
you
I
go.
get one.
Or
Absolutely.
make a little Excel spreadsheet and share your screen so we can make it simple.
Yes.
Awesome job, Pierre. You've
Some of
encouraged
that commission to get your Okio cam.
Yes, absolutely. Once I get one.
How old was
Absolutely.
you, Pierre?
How good is
She's 30. She's 30. She's 38. She's 38. When she got the IUL, she was 36. But like I said, prior about 6, 7, she's had the term policy for 6 or 7 years.
Wow.
So we're still working on. I'm still working with a schedule to obtain her term policy to actually break that down to her and things of that nature. So we're still in the process of breaking things down to her and getting things
All
straight.
right.
But
Okay, we got it. Great job.
Okay,
we got
Thank you.
47.
Yep.
Still, we got to wrap it up here. Gordon, Ace, anybody connected to the announcements and incentives? Any announcements on that? Or did Gordon have to leave?
No, I'm back. Sorry.
Well, what would you say about the event coming up, Gordon?
Well, it's the most important event we've got in our lifetime right now because of all the things that are happening in the industry, things that are happening within our company, and things that are happening within your company. So this weekend is a do not miss mandatory meeting for those that are ready to move up. It's not a meeting you want to miss. This could quite possibly be the last meeting of the year for us all together. I don't know yet where we're at, but yeah. So this weekend is going to be an incredible weekend.
Ace.
Yep, we got 38 people with tickets in hands. We've got folks coming out of town, so we're really excited. I think we have about 6 or 7 people from out of town. They got hotels, airplane tickets.
Shout out to our team too. We got like 24 tickets in hand.
Yeah.
How should we dress at the event?
For success.
How should you look?
Sharp.
Thank you.
Jasmine put out the list of the people, the qualifiers. Christian is hosting the brunch at his house Friday. It's going to be first class. Christian is going to have a chef cooking personalized omelets and things like that. So that's going to be fire. And then dinner's going to be for the qualifiers at our office. If you didn't qualify, I suggest you get there around 6:30. We're gonna Rob is gonna go from 7 on to give you a pre-warm up of the event on Saturday.
7:00 meeting.
That's what Jasmine wrote. I don't know.
7 o'clock locker room boot camp.
7:00 locker room boot camp.
Yeah, dinner's gonna be ready at 5:30. So it's from 5:30 to 6:30. We're asking the RVPs to maybe bring Gordon that honey whiskey. Some
No
wine.
alcohol.
Oh, that's right. No alcohol.
Because we got a meeting at 7, so
We
we
got to
better
work.
Yeah,
This is
no
not party
wine, no
time.
whiskey that night.
Not party time. Party when you're financially independent.
That's right.
You have
That's
to
right.
go, Mark?
No, I got a question I've been
Okay,
waiting
go
to ask
ahead.
Gordon before. I know Gordon's got a lot of appointments. Gordon,
And we do have a couple of incentives to hit real quick. So before you jump off, let me hit those after Mark.
Wait, yeah, go ahead.
Hey, Gordon. So
Got it.
with the individual who had the term for the million and it dropped, when you said, obviously, well, I still want to look at it, which is part of what we do. How did they feel with that reaction when you told them, well, this policy is going to go from $1 million to $50,000 and you don't have a choice? Because I'm sure they were feeling pretty good that they had the term insurance.
It's a great question, Mark.
Yeah.
Thank you. Yeah, I'm really interested in that because, it's easy for someone new like me that's, been around and hanging around is say, oh, they got terms. So, well, the term turned out to be a ripoff in the long run. And
Correct.
you found that out. So that has to be so important.
And most of them, and Mark, most of them are.
Okay.
So don't ever assume, oh, I got term. Oh,
okay.
gosh,
Well,
that's
my learning point here. And you then, Gordon, you have to have this total trust of that family, that individual. And of course it expanded. So that's very important for me to learn that just because somebody has term doesn't mean that it's like ours.
Yeah.
Thank you. I appreciate that.
Just 2 quick comments. One is you got to go slow to go fast. So some of you guys try to close too fast, and we did not. That was a third appointment. So we were collecting information. I presented on the first appointment. We answered questions. We got the information sent back to us. We met again, talked about, I forget what we had, but anyway, it was 3 appointments I spent with this person and getting their information and then asking that question. Is that something that you would like to have happen? So let's assume, and I played it out and I just said, hey, let's jump ahead. You're 68 years old or whatever the age was. And your insurance company says, hey, you've had this million all these years and now you're going to 50,000.
Wow.
And you're looking at your doctor and your doctor's telling you got high blood pressure, you got diabetes, you might even have cancer. Who knows, right? It's possible. So now you're uninsurable. Is that what you want? Or if you had an insurance company that said, hey, you got the million, we'll let you keep the million. Which insurance company do you want to have in your corner?
Million every time.
There you go. So that was that.
Well, thank you.
So go slow to go fast. Don't try to close so quickly, especially when people own financial products. Get their data and put their data in their F&A. And we're still working on our F&A. We haven't completed that. We're still working on it. But I went through a total solution with what knowledge I had, and she still owes me information. We're going to keep working. So we got another appointment too. I'm setting up investments on the next appointment. Okay.
Anybody have anybody coming at noon?
Until this second.
Do you want me to hit those incentives for the month?
Yes, but I want to know, does anybody have anybody coming at noon today?
I might have one. Ida said she had one in the chat.
I thought Matilda had said she had 4.
Okay.
Weekend.
Go ahead, Gordon.
Okay.
Yeah, not today. Not today.
Not today.
I think I may have one.
I have one, and she confirmed already.
I'm not going to hit them all, but just a few bullet points that I think these are the ones that I would be focused. Whoops. If I was you, I would know that this month, Bombshell, we've got, can you see my screen?
Yep.
Future RVPs. Now, RVPs, there's an additional bonus. You go look that up. You're an RVP. You can figure it out. Future RVPs. Grow your premium target. If it's 5,000, gross bonus 200, grow by 20% or more, you could get a bonus. So for the first time in a long time, they're giving bonuses now for future RVPs. Its minimum level is 5,000 to get a bonus. If you do 10,000, it goes up to 400. Could be almost $500 in bonus money on the table. So, and if there's an outlier, a $20,000 leg, I mean, I think Rob said he wrote 50,000 one month. So I don't know. I mean, somebody can if they decide to get their butt on fire. So this month, bonuses below RVP. I think that's pretty cool. What else? I think rally your team 1 by 1,000. You get a nice little leaders building leaders rally towel. Fight for every little thing there is out there. This is a cool one. I like those things. I don't know about you, but I like to fight for little things. or one recruit in 10,000. RVPs play up. There's that. You can get that. Future RVPs play up to the next level. If you're a rep and you go to district, play up to the next level in recruits and process premium. Reps, senior reps, this minimum 3 by 2,500. That's a district level qualifier. Districts 5 by 5,000. Division 7 by 7,500. And you got to do 1 by 1,000. You're going to get this nice mini team football helmet. Another fun little trinket to fight for. RVPs, start rewarding those power players in your team that represent the best of your base shop. Use the setup championship ring helmet, and there's going to be these new little stickers they're putting out. So all kinds of little things to go for. But I think the biggest one of the month for all you guys that are future RVPs, get to 5,000. Do a $5,000 leg. That we're in the middle of this contest we're fighting for. I don't know if anybody is on track. We're on track on bonusable premium, but I think the biggest thing really going back to that. And I also got notification from Dennis that there is a bonus paid out for all these ancillary products. Did you guys get that? Anybody get that notification? Dennis O'Keefe, I think he texted it to me. Yeah, I got a text that says auto and home referrals, all reps, 3 or more closed personal auto, home, or small business in the month of October, $75 referral bonus for the first 3 closed apps, and then a $75 bonus for every closed referral beyond 3. So if you do 4, you're going to get a $150 bonus. If you do 5, you're going to get a $225 bonus. And if you got somebody that needs auto and home, that's considered 2. So homeowners is the best people to target for doing the 3-way calls. We should do our most 3-way calls this month. ID theft, which Christian just shared, PLPP plus ID theft, 3 or more. If you do 3 or more, $75 bonus. They're putting cash on the table. 3 or more, $75 bonus. 6 or more, same thing, PLPP. And this is for RVPs. There's a $500 bonus. So if you got 2 teammates that fight for it and get the 3, and then Vivint this month, 3 or more Vivint's, an additional $300 bonus. So the Client Solutions is putting money on the table in addition to bonuses for premium. That's it.
Asante, who do you work with?
Ellis.
Nice. Do you live in the cheapest neighborhood?
No.
Why not?
Benefits.
Do you drive the cheapest car?
No.
Why not?
The benefits.
Do you eat the cheapest food?
No.
Why not?
The benefits.
Do you get the point?
I get it.
Okay. So if nobody does the cheapest of anything, but then all of a sudden, Gordon, when it comes to working with you, they want the cheapest. Why?
They don't know all the benefits.
They don't understand the value and the benefits. So you must get good at, you must learn and be able to overwhelm people with
the benefits
and value. And that's when you turn pro, when you really understand the magnitude of what we are bringing to people.
It just seemed like when he was explaining it, it was the same exact money and the same exact coverage.
Correct.
It seemed like it was the exact same. So I'm like, why would you switch? And then he added on the children's rider, and I was like, okay, this is the bonus that he's adding on to it and the education that you're going to get from it.
Right. And it's not just when the education. It's the education and what the education means to you.
Right.
It's really comprehending that the difference from the poor, working class, working poor, you know, the people who work all their whole life and the rich is education. Is what you do with your paycheck. Yeah. Some people make the same money and end up millionaires. Many people have the same occupation and don't. Most don't. The few do. Why? Because the people who do some things differently. Yeah. Well, how do they do it? They know to do it. Maybe they had somebody in their life encouraging them to do it, like a father or a good friend or an advisor, Gordon.
Yeah, even, I mean, I don't know. from experience, a lot of us on here know that 25,000 child rider on 3 kids. A lot of people, if they're dealing with Globe Life, Baltimore Life, Gerber Life, they're going to end up paying $75 a month. They're going to end up paying, they're going to get 3 whole life policies for those kids. They're going to be overwhelmed with premiums and underwhelmed with protection. So just getting 25,000 in that educational piece is worth the extra money.
But in addition to all that, you got a whole lot of other stuff is what
a whole lot of other stuff.
That's what I'm saying. A lot of other benefits that are really huge, especially the military and terrorist clause.
I know
That's
we're
huge.
over time, and
wow.
maybe arguably Mondays should be an hour and a half. I don't know. Maybe they should go.
I think you're right, Gordon. I was already thinking about that.
But I had something interesting, if I can share one last thing, and then I got to roll.
From now on, we're going from 9 to 10:30. Okay.
For Mondays.
Look, we were talking about making millions here.
Yeah. We used to drive down to the office, spend 2 hours.
It's been 2 hours, and then an hour each way.
And guess what happened when we did that?
We exploded.
We were exploded.
Yeah.
When people were committed and learning a lot or more.
Christian, interesting little tidbit I want to share about investing. Can I share a quick investment thing?
Absolutely.
My mind was blown this weekend. We're in Wisconsin. We're cleaning up. Jen's getting all memorabilia, photos, albums, all kinds of stuff. She's getting from her mom. Mom passed away last November. And so we're moving furniture, and she's going through some of her personal things. And her mother left her some investments, her and her brother, some investments. And her mother was my client, but she also had from previous inheritance. Somebody in the family left her some stocks. I didn't know anything about it. I kind of knew there was something. Well, check this out. She opens up the statement. She finds it, and she says, honey, look at this. The number one stock she owned in her stock portfolio. I was like, you got to be kidding me. And she did not know, and we never talked about it, but was American Can, Jerry Size Company.
Wow.
Number one stock in her portfolio. Now, most of you guys don't know what that is, but some of you guys do. But American Can was the beginning of Primerica. Jerry Sy bought and got, we got involved with, it was Art Williams, and then it was the American Can. The whole history is really interesting. It's in the coach, but American Can ended up becoming Primerica. Primerica morphed into this big company. Sandy Weil bought that piece, and it became Citigroup. But that blew my mind. That was number one. And then it made me remember number two. If I didn't get in this business, go to that damn meeting in Gaithersburg, see Christian get all fired up and excited and show up, my parents wouldn't have gotten out of New York Life. And them getting out of New York Life with their fixed annuity, all their whole life insurance, all that money that they had tied up in New York Life, Dad ended up going all equities, all in. Now, just that transfer, Ellis, from 23 years ago is $1 million plus today.
And
that's both families.
Got me in, and I'm financially independent.
And you're financially independent with millions. So 2 families that I know for a fact, and my families gave me a little bit of crap in the early days. And they both, if it wasn't for Art Williams, myself getting started, Christian working, it's the domino effect. It's changed my whole circle of influence. And it could change yours if you stick around and don't quit.
So, Asante, what's the moral of that wonderful, beautiful, magnificent, warms my heart, music to my ears story?
Yeah, with us, you're getting a financial education behind actual getting your coverage with us.
And
if you go with somebody else, you may not.
That's right. And when I was talking about, I was asking Matthew, it's like, what's a financial education worth? He said, well, it could be worth a couple $100,000. And I said, a couple $100,000? I said, how much? And then I repeated the question looking for the right answer. Because right here, Gordon just told us that advice was worth how much, Gordon?
Millions.
Millions to your family.
My family benefits.
Your family.
I've made millions doing this, and I didn't know that
multi-millions.
I didn't know my mother-in-law made money off of the sweat equity of this company and Art Williams, and she didn't even know it.
Right. Don't ever.
I was just curious on when she decided to actually make the switch, because if it's like you said, it was 100, if it was the same exact coverage and theirs was 100 and then ours is 130, I'm like, why would you want to switch
$1 million.
when you're actually getting cheaper? That would actually make sense. Unless you told her like, hey, there's education that you're going to get behind it, and actually I'm going to add on the children's rider, and then she decided to make the switch.
Asante, when you're dealing with us and another company,
right.
It is when you're dealing with us.
Right.
Now, I'm not saying a brand new guy getting in the business who doesn't know anything I'm talking about,
right,
and doesn't get any training and just hears an op meeting every week. Those people in our business don't know anything. They're not equipped. They don't have this conversation. They don't know about Milico. They don't know about how insurance companies make money. They don't know about reinsurance companies and our uniqueness and etc. Because they never get into that. They're just talking about an op meeting every week. But for people who want to make it in this business, you need to know our competitive advantage. Right. You need to know how the business works, because this is business. And to succeed in business, you need to know business, right?
Right.
So when you are talking about price, and I'm saying that when you're talking about us and the competition, it's never what?
Price.
Huh?
Never the same.
It's never about price.
Ida, you need a better microphone.
Okay.
Okay, because I have difficulty understanding what you said, and I don't want to ask you, what did you say again? Can you hear me okay, everybody?
Yeah.
Yeah. This is a Yeti. And it's heavy because it's a real microphone. Okay.
This is a Yeti, and
This
I
is
got
a
it
Yeti.
because Christian said we needed to finally get it.
There you go. Okay. So computer microphone is weak. Okay, but anyway, I'm sorry about that. And Asante, when you're talking about us, as Tashomi moves his microphone, when you're talking about us and the competition or opposition, it is never
about the money, right?
No.
What is it?
Never. What you're talking about? It's never.
It's never what?
It's never the same.
Oh, okay.
You're saying, Gordon, it was the same third price, the difference, and
But
it's never the same. Why? Why is it never the same when you turn pro in this business? Why does Gordon will never go on a enemy agent confrontation and what they are doing is the same ever? Why?
I just think it's just more benefits to it. You know, the financial education they decided to bring to it. Is that not?
Denise? Why, Denise?
Because Gordon knows them. He knows the benefit and he knows the value.
Nobody does what we do.
Nobody's going
trying to sell cash value life insurance, man.
Nobody's going to build a program for them to go to financial.
They're not doing an F&A, right?
Stay with them.
And there's always something wrong with it. I'm working with a lady right now, which she didn't even know her policy increases every 5 years. I was working with one that increased every year.
Yeah.
And they don't know that if they don't look at it, but we know that that's a possibility in their policy.
They're not. They're trying to sell cash value life insurance that you need insurance your whole life. We're trying to get people out of insurance and be self-insured. It's not the same.
So that's why, just to emphasize for Asante's sake, why getting in the field is key, and getting the contract, the actual policy to look at is key. So it's very important every time.
No, I get that. I get that. I was just doing just the straight numbers, but I get it. I get it. And it's multiple appointments that he went with her to, so I get it.
Base Shop, could you please stay on the phone, and everybody else, make it a great day. I'll be ready to go at noon.
Thank you.
You're welcome. Proud to be in business with you. Let's go do something great in America.